if you continue to get the market addicted to stimulus, what happens when stimulus is withdrawn?
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update, and with us today is our president, Andy Schectman, for our weekly chat. Andy, thank you so much for joining us today.
Thanks for having me, Elijah. Good to see you again.
The first topic I'd like to discuss is the stimulus program, which there were hopes for it to pass this week, but it looks like, again, we're going to end in no deal. That's what it's looking like right now. What is your perspective on that? We're seeing a little dip in the stock market, not too much, but it seems like we're not going to get help at least anytime soon.
Look, from a humanitarian standpoint, food lines, people suffering, I understand stimulus, but where I have problem is the ever increasing belief that stimulus is needed to be the salvation to the market. And I think that it's the wrong path to head down, whereby government spending and stimulus is what is needed as the elixir of sorts to fix the ails of this economy. It's putting us down a bad path in the respect that if you continue to get the market addicted to stimulus, what happens when stimulus is withdrawn? What happens when there is no more stimulus? What does that portray for the markets? And what does that portray for this country? We need to find a way to get people back to work and incentivize people to work rather than being unproductive looking for stimulus. Now, I'm not trying to be cold and unheartless. I just simply am trying to say that, yes, from a humanitarian standpoint, we do need stimulus to help some people. But the market doesn't need stimulus in order to find its direction. Quite frankly, I think it's a scary path that we're heading down. And, you get someone addicted to stimulus, pulling that stimulus away is not going to be an easy thing. And so I look at this whole stimulus thing, and I think it's all of a sudden are we embarking upon modern monetary theory? Is that where we're heading? And I think the government should not be looked upon as the stimulus generator of last resort. And it's troubling to me, and I think it should be to everyone listening to this as well.
Yeah, I think that's a good point you make there. And another point is that, where is this money coming from? It seems like you either have to tax people in the future, go into debt, or print the money. So there's no such thing as a free lunch at the end of the day.
No, and that's what they've done, Elijah. We're already $4 trillion in deficit mode this year. Trillion seconds ago was 31,688 years ago. Where the heck does it come from, Elijah? That's the point, is that we're going deeper and deeper and deeper into debt and paying for this stimulus with borrowed money that we obviously don't have. And it's compounding and getting worse. And more importantly, the market is getting addicted to it. You keep hearing more stimulus, more stimulus. Well, if we only got more stimulus, well, I've never heard that before in my entire lifetime. And now that's all we hear about. Now, granted, these are unusual, unconventional times. And some people are in need of stimulus as so much of the economy has been decimated, and now these second lockdowns are only going to make things worse for many people that are hanging on by a thread. And so for those people who are looking to put a meal on the table, yeah, absolutely, I understand that. But to look at the markets ails and say, well, stimulus, if we just would have got that stimulus, everything would have been better. I think it's a horrible, horrible path to go down, and I think that the problems are a whole lot deeper than whether or not the government throws some more borrowed money at the problem. And it's a Band-Aid covering up a 3-inch wound and deep with a little Band-Aid. It's not going to fix the ails. It'll just paper things over for a very, very short period of time until there's more stimulus needed. And that is where we get into a problem. The government should not be what is fixing these problems. It's the free market that will fix these problems. And that's hopefully where at some point we'll get there, but we're a long ways away from there now.
Do you see this having any impact in the precious metal markets, this lack of being able to push through this stimulus package?
The precious metals market reacts, I think, to a lot of these things because in some respect it's being pushed around, it's being manipulated by the rhetoric of the day. Quite frankly, I think that the precious metals market is less pushed around by talk of stimulus than let's say the Dow Jones or the S&P 500. I think that the precious metals market right now is more affected by what's happening with Bitcoin. I think the precious metals market right now is more affected by what's happening with the Dow Jones. I think we saw 800,000 new unemployment claims, and yet the market keeps going higher. It's ridiculous. I mean, the market is completely and totally detached from Main Street. And this is kind of the point, is that I think that most people who own precious metals don't care about the stimulus, don't care about what's happening with the Dow Jones or the S&P 500. But the people at large, the mainstream, they see what is being shown to us on TV, and they see a stock market that continues to roar higher. They see cryptocurrencies that are moving higher. They see a vaccine, and they're looking only at the periphery. They're not looking underneath the hood to see the systemic problems were here long before COVID. And so all of these little pieces of news of the day direct people in the wrong way. I think it's a micro perspective. You need to take a macro perspective. You need to take a step back and see that the systemic rot underneath the surface is far, far greater than the few green shoots that we see up above the surface. And so, yes, I guess you could argue in a small way that it does. The rhetoric of the day certainly helps control the price of metals. But Elijah, if I'm being honest, I'll tell you, it should have no bearing. The problems or the reasons to buy precious metals go far, far deeper than talks of stimulus or no stimulus and talks of Bitcoin or no Bitcoin. It's far deeper than that. But these are the types of, news tidbits of the day that certainly are affecting people who are looking from the periphery. They're looking not deep, but they're just glancing at it, thinking, should I buy now? We'll look elsewhere. And so, yeah, it has an effect, but not a major one. Certainly not one, as far as I'm concerned, that have any ramifications on the long-term fundamentals or outcome for what happens with precious metals.
And speaking of long-term ramifications for what happens to the precious metal markets, some people are saying that a rise in interest rates would cause precious metals to fall, or at least not rise too much in the first quarter of 2021. So what is your perspective on that? A rise in real interest rates being bearish for gold?
Ultimately, they cannot raise interest rates high enough, Elijah, to affect the gold price without completely collapsing the economy. The term in economics is Gibson's paradox. It speaks of the inverse relationship between real interest rates and precious metals. In 1980, Paul Volcker raised interest rates to 18%, I believe, and that certainly put a brake on the precious metals freight train that was roaring ahead at that point at its all-time high of $850 and $50 silver. Right now, for those out there that aren't quite sure what real interest rates means, it means the interest rate factored against inflation. You have a Federal Reserve who tells you they want to have an average rate of inflation at 2%, which means it could be higher because they will smooth it out over the last several years. They haven't been able to achieve 2% inflation by their own measurements for quite some time. So does that mean they'll go to 3 or 4? The point of it is that when you look at interest rates right now, just barely above the lowest level they've been in human history. how the heck can they ever raise real interest rates above the rate of inflation in the country that is inflating away the currency with reckless abandon, as are all the central banks, Elijah. When you see real interest rates above or interest rates above the level of inflation rather than markedly below, currently the benchmark 10-year Treasury is under 1%, 0.8, 0.9%, 80 or 90 basis points. So let's just do a little exercise. If 80 or 90 basis points is what is being paid to us by the Fed on a 10-year Treasury, and the Fed's own, by the Treasury on their bonds at 0.8%, what have you, then what happens when the Fed is going to have inflation targeted at 200 basis points? Does that mean you're losing 120 basis points in purchasing power every single year? It kind of seems that way to me. So when we talk about gold not paying any interest, it sure beats the heck out of losing 120 basis points per year. I guess what I'm simply trying to say is that right now, stocks, bonds, and real estate are also very, very, very negatively correlated with interest rates. You have all-time highs in the stock market, the bond market, and the real estate market, and there is no coincidence that it comes against the backdrop of the lowest interest rates in human history. So the Fed can do all they want to try and raise interest rates, which they really don't want to do. The market is what's going to dictate that eventually. But the little italy-piddly rise that they may try to get in interest rates will be pale in comparison to what it would take to really materially affect the precious metals market. In reality, to me, if interest rates rise, it is far more detrimental to the stock, the bond, and the real estate market than it is to the precious metals market. In order to see people not be incentivized to buy precious metals in lieu of interest-bearing fixed income investments, those interest rates would have to be substantially higher. And I think because when you look at what the Fed is doing with money creation, massively creating money in full modern monetary theory, talking more stimulus, and we're already $4 trillion in the hole this year, and talk about all the time a trillion seconds ago being 31,688 years ago. The numbers are so dang big, Elijah, that the little itty bitty raise in interest rates by a quarter or a half point or 3/4 of a point, whatever it will be, is a drop in the bucket, and it's rhetoric. Here again, it should mean nothing. You want to get Paul Volcker in here, or a politician that has the nerve to raise interest rates to a high enough level where it would really, really matter. Then the precious metals bull market will be over, but so too will be a spiritual experience for everyone in this country who owns stocks, bonds, and real estate, because they are all inversely correlated to the lowest interest rates in human history. You raise interest rates, the bond market pops, the real estate market implodes, and the stock market is destroyed. Who is going to buy stocks at the highest metrics in valuation in human history when you could buy supposed treasuries with safety earning a fair rate of return? What would it take to go back to what I saw when I started this company in 1990, where you could get 7% interest rates on a 10-year treasury? $1 million invested would net $70,000 in return, tax-free. Now that same $70,000 tax-free would take an investment of $10 million. So my point to you is simply, if you think that will slow down the gold market, what do you think it'll do to the biggest market of all, the bond market? It will destroy it. There'll be blood in the streets. And at that point, when that happens, it'll come on the heels, if it really happened, of a dollar that's completely and totally destroyed. All the more reason to buy precious metals. They have gotten us into such a sticky wicket that I would argue there is a greater chance of the currency being outright destroyed than using these silly metrics of interest rates rising by a quarter or a half point derailing a gold bull market. The reasons to own gold have so much more to do in terms of reasons to do it than a quarter or a half point raise or in interest rates. This is kind of what I've been trying to say for so long to people. Focus on the big picture. Stop looking at the noise or listening to the noise. Stop seeing the rustling leaves of the trees and see the forest. The leaves blowing is just noise. Yeah, interest rates could rise a little bit, but they're not going to let it rise enough to destroy everything. So the reasons to own gold and silver go way deeper than just a modest increase in interest rates into the first quarter of 2021.
Well, Andy Schectman, thank you so much for your time today. Before we let you go, if people would like to give us a call, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. Andy, before we let you go, any last thoughts you'd like to leave with our viewers?
Yeah, Elijah, I just want to simply say this. I think the most important thing people can do is take a step back. Take a step back and try your hardest to see the big picture. I think you use any pullbacks in any bull market that you're chasing, whether it be equities or cryptocurrencies or precious metals. You use the dips if you are convicted in your belief to add to your position. Do not chase the rallies, buy the dips. And I will tell you, Elijah, that I've never been more convinced that I think 2021 is going to be a very, very disturbing year. I think that our economy is heading down a very, very slippery slope. I think most of the small businesses in this country are hanging on by a thread or gone. And all we're going to see when the smoke clears are the big companies like Starbucks and Target and Walmart and Amazon and Mom and Pa are going to be long gone. And we're all going to be calling Mother Amazon to drop off our products instead of going to the little shops or to the malls or to the small businesses that are the backbone of this economy. If people think that a half a point raise in interest rates is the road to salvation, I have a bridge to sell you. I simply think you take a step back, you see the big picture, and realize that we are heading down a path whereby what is conventionally used to fix the ails of a tweaked economy at this point are long past their usefulness, and I don't think a half or a quarter point raise in interest rates will do anything to this precious metals market other than increase the rhetoric and allow the big money who's accumulating it more time to do so. So in any case, Elijah, I appreciate your time this weekend. These are interesting times we live in, and I appreciate you and always allowing me to try to shoot from the hip. And I wish you a great weekend and happy holidays, and look forward to catching up with you soon.
Definitely. Same to you, Andy. Thank you so much for joining us this week, and God bless.
God bless, Elijah.